welcome to the ApexBAI Insider, the show where advisors, operators and founders get the tools and insights they need to scale intelligently and profitably. We're kicking things off with someone whose work sets the standards in financial structure and tax strategy, the Cashflow Doctor himself, Eric Nghiem. So Eric, thank you for being here today.
Yeah, thank you for having me. I appreciate it.
So Eric helps fast growth entrepreneurs optimize their tax structures, eliminate operational inefficiencies, and significantly increase their after-tax income. If you're scaling quickly and need to tighten the machine, this conversation is going to be gold. So let's dive in. Your clients usually sit between $500,000 and 10 million in revenue. Fast growth, lots of complexity, and often some chaos behind the scenes. You've said something powerful before, so founders don't actually know where they're spending money or what's producing ROI. What is the single biggest structural or systemic issue that stops founders from maximizing cash flow you help them unlock?
Yeah, that's a good question. So I'll tell a little story. I'm working now, just engaged with a founder. She was running she's running a tech company that focuses on, they call it NFC chips, or near full technology. She came to me and she was like, Eric, we're looking to sell the company. We have an offer on the table. But the thing is, we don't have any of our financials. So this buyer can't do proper DD. And so I sat there and I was like, hey, you've been running this company for 3 years. What do you mean you haven't tracked your financials? You haven't tracked your expenses. So we started going through the list. I was like, do you have a QuickBooks set up? She said no. Do you have, a tracking of income and expense? Not really. So she brought in investor funds and she was like building this thing, right? And that's kind of the challenge that a lot of founders have. Is a lot of founders are really great at building a great product, doing business development, raising investor capital. But most founders don't come into building a business because they want to do the financials or the accounting. The problem is, your business, the lifeblood of your business is your financials and your accounting. You don't know where you are without properly tracking those things. So to kind of answer your question structurally is like a founder that is really focused on growth, scaling, and profit should be working on tracking their financials on a regular basis. And then that would provide us the report that we need at the end of the year to also prepare and file a tax return as optimally as possible. So I would say the first step for every founder is to start with a financial foundation in mind. How are you going to track your income, your expense? I know it sounds terribly boring, right? Nobody wants to look at numbers all day. But at the same time, too, it's like if you don't know where you are on a monthly basis and you wait until year 1 or year 2 or year 3 to track these things, by that point, it's too late.
Of course, it's like being proactive rather than reactive.
Yeah, 100%.
You've mentioned that most accountants don't talk to clients until end of year when the damage is already done. What operational shift does a founder need to make to go from reactive accounting to proactive, review system that you run with your clients?
I mean, really, it's just a matter of mindset shift, right? Of that your accounting isn't an expense center, meaning it's not an expense that doesn't give you an ROI, right? Your accounting and your accounting team that you bring on board, whether it's internal or an external team like us, should be looked at as a cost savings tool and an important proactive tool, right? So a lot of folks that initially get into business only look at their financials at the end of the year because there's a requirement. The IRS says it's time to file your taxes. And oh shoot, I got to get my books completed. The problem with that is once the year passes, and then you look at your financials and say, dude, I didn't realize I spent 20 grand on this marketing expense and we didn't get an ROI on it. Or I didn't realize we spent $4,000 on this software package and we're still paying for this on a monthly basis. The number of businesses, even successful businesses that I've seen that don't have proper expense tracking and don't realize until it's too late how much they've spent on things that haven't helped them is crazy. There's a lot of folks out there, right? So it's really a mindset shift of, okay, let's move you to a regular cadence. Like all of our clients are on a scheduled call on a monthly basis of, hey, on the 5th of the month, the 7th of the month at 2 p.m. on a Wednesday, whatever, you're going to meet with your lead accountant, our client success manager, and your bookkeeper. And we're going to go over your financials, go over things that might need to be additionally categorized, and then talk about some forward-moving things. How can we help you with your company moving forward, right? That whole mindset shift has dramatically shifted the way that a lot of our clients have run their business. And for the most part, most of the businesses that are on this monthly cadence have either gone on to raise additional investor capital or scale their companies by 50 to 60%, or even grown their profits by 10 to 15% in terms of the profit margins end of year. So it's a huge impact.
Of course. So, the weekly, monthly reviews is a lot more important to stay on track and, keep that upwards growth rather than steady throughout the year and then at the end realize that it's dropped off.
Yep, exactly.
You're known for tax strategies, but you've also said that tax savings means nothing if businesses sort of leaking money operationally. What do you see as the biggest leaks? Is it compliance gaps, messy communications, or a sales process that loses more than it converts?
Every company is different, but the top three, I would say, number one are recurring expenses that aren't used anymore. Right? Sometimes you get hit by an annual charge for a software package you bought 2 years ago and didn't realize you had it, right? That's a huge gap and a leak. So what we normally recommend and what we normally do is we run a report every quarter for our clients to show them what are the recurring charges. So they could go through it and then line by line reduce or cancel out the things that they don't need, right? When you think of it from a tax perspective, if you're in the highest income tax bracket in the US, it's 37%. And California is 13.3%, that's like 50%, right? If we're able to reduce your recurring expenses by $1,000 a month or $12,000 per year, we've just basically put $6,000 back into your pocket, right? Most companies are operating at a 20 to 30% profit margin. Just by cutting these expenses, we're already effectively driving your profit margins up, which is great, right? The second thing that we typically find is a lot of folks, and it's been challenging because we've also done paid marketing, is the ROAS and the cost of marketing and the conversions of marketing on paid ads like Meta, for example, have dramatically changed over the last year. Now, a lot of folks, they've been consistently paying ads, right? And it's been converting for them, but a lot of my clients, and ourselves included, have seen that go down. If you're not monitoring that on a very frequent basis, there can be times where Meta or Facebook is burning cash, right, with no results. And if you're not nimble enough to make those adjustments and you don't realize it between a month or two, you might be burning $6,000 to $7,000 in ad spend that isn't resulting in anything, right? So that's the second area that we find that a lot of clients are leaking and bleeding money. And then the third one would be on the tax side, right? When it comes to taxation, again, if you're in the highest federal tax bracket, you're making over, $600,000 per year, plus you live in California, which I live in, you're looking at almost a 50% tax bracket, right? So every dollar we're able to deduct or reduce your net income by is going to save you 50 cents effectively in income taxes, right? So between the three of those, oftentimes you're able to find a lot of efficiencies where clients are able to reclaim tens to hundreds of thousands of dollars back that effectively goes back in your pocket.
If you're not tracking what marketing strategies work and what's not, there could be one strategy that's working really effectively, but they can't see the one that's not working effectively. They just see money coming in. So it makes sense to kind of track, this one's doing really well, this one's not doing so well, maybe shut this one off or change the strategy up a little bit and balance them out.
Exactly. I mean, that's the biggest thing is like, your finances is the lifeblood of your business. And there's a lot of things that are part of your financial lifeblood. Ad spend, marketing, operations, staffing, all these different things. And if you're not looking at these on a regular scheduled basis, you don't have certain triggers or key performance indicators that make you say, oh shoot, we got to look at this some more. If you don't have those in mind, it's just a recipe for doom, basically, right? Or burning cash. And it isn't until a founder starts to realize that, hey, we should be looking at this on a frequent basis. We should be looking at how things are going, is when a founder can really see into the future, okay, how can we actually scale this company? is this ad campaign actually going to be something that's going to help us grow, or should we just kill it, right? Like, you want to be in a position where you can make good, informed decisions, and it all comes from financial data. Yeah.
Keep an eye on things and make sure that it's going in an upwards trend.
Exactly.
You also analyze allocation percentages, payroll, marketing, operations, owner distributions. You said founders often misalign those percentages with their actual goals. So in terms of everything, for founders who feel stuck in growth, what's the allocation they almost always get wrong, apart from the marketing, and what immediate adjustments should they make depending on whether they want a lifestyle business or an exit?
The biggest thing that I see that founders don't really think about is your overall income tax. When you work for a company and you get a W-2 paycheck in the US, it is, right? Or even in the UK, right? When you work for somebody, when you get your paycheck, oftentimes taxes are withheld for it. So it's kind of like out of sight, out of mind. All you know is when you file your tax return at the end of the year, you pay the tax somehow, and that's all you care about, right? When you operate or you own a business, no one is paying that tax for you. Even if you were to be, a salary holder of a company, if you also add in your profit distributions, there oftentimes isn't sufficient enough of a deduction to pay for your tax. So we often come across founders who, at the end of the year, when they file their tax return, realize that they owe tens or 20,000 or whatever it is more in income tax. And at that point in time, they're already into this next year where they might have a cash flow crunch, right? And then so now they end up setting up an installment agreement with the IRS to pay it off over time. But then they don't change that habit for the next year. Same thing. They have another installment agreement. Next thing you know, this snowballs, and now this taxpayer has, tens of thousands of dollars of IRS debt that's coming out monthly from their bank account, and it's really hard for them to account for their cash flow. We were working with a taxpayer that came to us who was referred to us, really successful DJ, did really well for himself. And when he came to us, he's like, Eric, I have an issue. And I was like, oh, what's the issue? It's like, I have an IRS installment agreement that I can't currently afford. I was like, okay, let's take a look at it. So I got what we call power of attorney from the IRS, signed by the taxpayer. I called up the IRS. It took me, probably 12 hours to finally get through the IRS. Turns out this taxpayer owes the IRS about $1 million. Wow. $1 million. This is a tax bill that has an accumulation of 10 years worth of taxes. Right? So here's a situation where the taxpayer, he made the money, he spent the money. Then when it came to file taxes, he's like, shoot, I spent the money. But don't worry, this next year I'll do even better. Right? He did better. But again, he didn't put any money to the side. So that tax bill added to the next tax bill. He started compounding all these interest and penalties and stuff like that. He was paying a $28,000 per month installment agreement to the IRS to pay down this tax debt. We had to go in and negotiate with the IRS a reduced installment agreement amount to $15,000 a month to help him with his cash flow. But if you still you sit and think about that, you're like, here's a situation where, a great situation or example of a taxpayer, and a lot of people are like this, that you make the money, and because no tax are withheld from it, you don't think about it, you spend the money, or your lifestyle increases accordingly. Yeah. And then when it comes to pay the taxes, you've already spent the money. So you're like, okay, next year I'll do better to pay it. But the same thing happens next year. You kind of forget about it. Lifestyle increases. You spend more money. Next thing you know, you're compounding and adding all these tax debts. And the one thing I always remind folks is like, playing with the IRS is like going to the casino, right? The house always wins. It doesn't matter what you do. The house is going to win, right? So it's important to set yourself up for success, to make sure you work with somebody that is telling you or advising you, hey, set up your quarterly estimated tax payments. Hey, let's get you on an installment agreement that you could afford, but prevent this issue from happening next time. The number of new businesses that come to us every year that I have to sit down and spend time with them explaining the importance of quarterly estimated tax payments and the importance of just, paying these tax debts off is astounding. Right? A lot of folks, they take the money and they spend it, and then now they're like, oh, shoot, what do I do?
No, that makes sense. And I can understand a lot of people's mindsets of, I'll make more money. Mm-hmm. But obviously, if you've got last year's, the years before's, and it's just compounding all the you've got to make a lot more money, not just a not just a gradual increase if you want to outrun it. So no, that's crazy. Looking ahead, Eric, so regulations are tightening, AI audits are becoming real, financial environment is shifting quickly. What's the next major shift that you see in tax strategy or compliance for entrepreneurs, and how is the Cashflow Doctor positioning itself ahead of that curve? So
on the US side, the US is in a really unique political space right now where the IRS has had their budget cut. So they need to do more with less, effectively. So we are seeing the IRS utilize more computerized automated systems to send out audits. Now, the problem with that is a lot of folks are going to be receiving audits or requests for additional information, but there isn't a customer service staff member on the IRS side to support that. So it's going to take taxpayers a much longer just to get issues like that resolved. We are also seeing the IRS become a lot more in tune with cryptocurrency. They've actually invested in a number of crypto forensics companies. And one of the biggest things a lot of crypto people don't realize is they think because they did something on chain and not through like a Coinbase or a Kraken where it goes back into your bank account, that they don't have to report that. What a lot of people don't realize is the IRS can track everything off and on chain, right? So a lot of folks are starting to get surprise notices and surprise bills about these things. From a business owner perspective, there's a number of things that we can utilize to help business owners to reduce their tax, right? This year we brought back 100% bonus depreciation. And what that means is if you purchase a heavy vehicle, a truck or SUV, you could effectively expense 100% of the purchase price, even if you put $5,000 down on a $100,000 SUV, right? You could deduct the entire $100,000. So there are different things like that. We have clients who are real estate investors where we accelerate how they depreciate the property, get a big upfront tax deduction. And the reality is at the end of the day, there's always really cool options to become creative with the tax code to help clients save on taxes. The biggest thing for a lot of our clients today that's a concern is, will I be audited? Because it's going to take me forever to resolve these things. And it's important for us as tax strategists and tax professionals to utilize tax code strategies that are common sense, which are by the book, and will actually reduce the chance of audit for a taxpayer. There's a lot of people out there on YouTube and TikTok that are promoting very sketchy tax strategies, or they heard from a buddy of a buddy of a buddy a tax strategy, and these are all, guarantees to get audited and get ensnared within like this compliance risk window.
A lot of things on Instagram and, promises, do this, you can save loads of money. And you always think, look, if you're doing that with a lot of money, in the hundreds of thousands or millions, and you're not going to just listen to an Instagram ad and follow it, are you? You're going to hire a professional like yourself and get a proper audit.
Exactly.
Look, Eric, this has been incredible. Before we wrap up, where can the audience find you and learn more about your services or reach out if they want to work with you?
Yeah. The two easiest ways are my website and also my Instagram. I'm pretty active on Instagram. I have a lot of people ask me tax questions there. It's The Cashflow Doctor is my Instagram, TheCashflow Doctor, DOCTOR. Or my website is thecashflowdoctor.com. You could see the products, the team that I have, and also, if you'd like, schedule a complimentary phone call just to see how we could help you.
Great. Thank you very much. Depth, clarity, and strategy. This was phenomenal. To everyone listening, thank you for joining us. Stay tuned. We're just getting started.